Hello and welcome back to Climate Solutions News. Today we're talking about investment. Obviously, climate solutions and technology rely to a very large extent on investment and investor appetite. And we have joining us today Sofia Esteves, who is Head of Market Insight at Net Zero Insights. She'll explain a little bit more about what the company does, but she's very well placed to talk about all of the trends in investment, whether it be through VCs, whether it be through corporate investors. And we'll get into talking about the different types of technology that are kind of coming through from their first quarter report as being the kind of areas that are experiencing the biggest investments and the biggest interest at the moment. So, welcome, Sophia. Thank you for joining us. And if you could start by kind of introducing what your role does and a bit more about Net Zero Insights.
Yeah, thank you for having me here. Net Zero Insights is basically a company about data and insights specialized in climate tech and climate solutions. And my role inside the company it's about creating insights and unveiling what's more important for the decision makers to support the decision making of investors, corporations, and even founders in everything that relates to climate tech.
Very good. And you operate globally, is that right?
Sorry?
You operate globally. You cover off
Yes,
the whole
we
global
operate
market.
globally. Yes, our market intelligence platform it covers a global landscape. Yes.
Fantastic. You've just released the Global State of Climate Tech Funding report for Q1 2025. Definitely worth a read for anyone involved in the sector. Could you kind of characterize what we're seeing? Are we seeing a stagnation, some kind of reset, or a new phase of maturity?
Well, if we look only for the analytic part of the data, we see a stagnation in funding and we see a decline in the count of deals. So that's what we see as a global picture analytically. But of course, if we delve deeper in this, what this stagnation in funding might mean, I would say that what we see exactly it's more a reset or a shift in the trends because we see non-dilutive playing a big role in this type in the funding type. We see also larger deals supporting mostly mature technologies, and we also see emerging technologies coming into the place more and more. So a growth of supporting venture funding for emerging technologies. So
Right. Let's delve into that in a little while in terms of the actual technologies. But just to drill into the non-dilutive funding and sort of debt funding a little bit more, can you talk a bit more about that? What's behind the shift, and what does it mean for startups trying to scale capital-intensive technologies in particular?
yeah, I think that non-dilutive funding is definitely a source of supporting the scalability of especially mature technologies. And we are talking especially about debt funding. It's playing a very big role. And we are seeing also in the last report, public organizations, especially from the US, also taking part of the debt funding, which was very curious for us and one of the main insights also covered on the last report, where we really believe that these non-dilutive funding sources can really be very important in the next future for the scalability of specifically mature solutions.
Fantastic. And you mentioned the US there. I think everyone would be very interested to hear your perspective on what is on well, the effect of policy changes that we're seeing in the US and how that's affecting the investment landscape. What's your take on that? What's the prognosis for what's going on in the US and how it's going to shake out?
Well, we might have a lag in terms of how policy shifts are affecting the funding landscape. But for now, we cannot really see, besides having a decrease in grant funding, we cannot really see a shift in the funding trends. So we continue to see U.S. very well positioning, continuing to leading in the global landscape, and so we think that in this case, market demand might be overshading the policy shifts or the potential policy shifts that we were going to see in the future. Of course, the things might change, and that's why we're going to soon to release the Alpha report. So things might change in the near future, but for now, we are not seeing a big impact of these potential policy shifts in the US.
Very, very interesting. I think people would have expected like a more rapid deceleration from the US. And actually, also the Department of Energy and USDA in the US backed $1.7 billion of debt financing in that first quarter. So do you see that continuing in the same way, or is that going to be cut?
We really don't know. That is a program that was released last October to support this type of funding round. So we expect to have some other rounds coming soon. But of course, we are not sure about that. But what does that might represent is that we might, with this policy, with this governmental support, sorry, we might see also some private investors getting more interest, and this might shake a bit the private investors funding trends. So we see it as a positive, a very positive thing that's happening, especially in the US.
Very interesting. And yeah, your report also highlights a rebound in early stage equity deals for US based startups. Is that part of the same pattern, do you think?
I would not call it a rebound on equity deals because US was always leading, let's say, but compared to the other global markets and leading markets, we see again the US very well positioned, especially in emerging solutions. So I think that there is a connection here on this equity investments from the US with a specific growth of emerging solutions that we also seen in the last few years.
Very interesting. And what kind of technologies or sectors are currently most resilient or growing? And what do you think investors are most excited about at the moment?
Well, for continuing on the emerging solutions side, we see the highest growth on solutions like sustainable aviation fuels, small modular reactors, data centers, and also direct air capture. That's where we see an increase, the biggest growth. But of course, if we compare to other more mature solutions, the funding here is still very residual, of course. But if we look more for mature solutions now, we continue to see batteries, EVs driving a lot of big rounds, as we've seen last year, especially in Europe. But now the US is also playing a role on those type of solutions as well. But again, they seem to be more risk taking in terms of investing more on emerging solutions compared to other global markets.
And what about AI? AI in the climate tech sphere, is there still a huge appetite for AI investment?
That's exactly the topic that we're going to explore in our next report because and the rationale for that is that we are seeing that especially generalist investors, they tend to be very interested in AI based solutions or any type of solutions that explore AI as an enabling technology. So that is one of the reasons why we believe that generalist investors maybe are leaving the climate tech space. And we also proved that in our last report. And that might be one way out to attract them back to the climate tech space, especially on those climate tech solutions that are based or can be developed using a lot of AI components.
There's another interesting shift which you identify or have identified over the last year or so, which is the rise of strategic investment by large corporates in startups. They were slightly reticent before to invest in technologies which may not be directly related to driving the bottom line, etc. But there's definitely been a shift over the last year. Can you talk a bit about that? What kind of areas are you seeing corporates getting more involved in startup climate tech investment, and how do you think that trend is going to develop?
Well, this is a trend that we have seen since 2023. Corporations getting more active, not only on exits, so especially merger and acquisitions, but also in venture funding. And another interesting part of this equation is that we have released a survey in last year, and investors' interest for funding specific climate tech startups is also very much based on the partnerships that they have already established with corporations. So even though corporations are directly investing, are directly funding startups, or are just having other type of commercial agreements, that's really important for the investor point of view, for other type of rounds. So yes, we see corporations being more actively, directly, but also indirectly in other type of commercial agreements, and that's very important for venture investors, for especially VCs and PE investors.
And are you seeing the type? You sort of said that the type of investment is moving, not just from exit, but to kind of um, venture style deals. Are they also investing in pilots and partnerships and things like that, or how's that changing?
So now we are also tracking a new data point in our platform, which is the commercial agreements. So we can see a lot of offtake agreements, for example, in place. And again, that's a very important point for VCs that are planning to invest in a specific company, um, especially in energy, where that's the field, the sector where we see more of these partnerships coming into place.
Great, very good. And you mentioned the generalist investors, so and their move away from climate tech. What could bring them back in? What were the characteristics that they were looking for that they had in the past that maybe they're not getting now, and what could be done to bring them back in?
Well, that's a very interesting but also very difficult question. Um, we think that, of course, policy can play a very important role here, but again, we think that market demand sometimes overshadow the policy stability or instability. So I think that bringing more or scale more these emerging technologies to a point where the market readiness it's higher can be a way how to bring back these generalist investors, because we have seen that they are pulling back from climate tech, and but specialty investors are increasing their activity. So this might be not a bad news, just a shift in the type of investors. But in fact, the funding gap left by generalist investors, we don't believe it can be completely compensated by specialist investors. So we need to have generalist investors again in the climate tech space. And beyond that, maybe also this activity from corporations or these collaborations with the strategics might be one way how to get them back to the space.
Now, this is a question that may be out of the studies that you've done, so you may not know the answer to it. But are you seeing a decline in the overall ability of startups to get funding? You know, is there a higher proportion of startups that are failing before they even get off the ground because of lack of funding?
Well, the funding landscape is definitely much more competitive than it was in the peak of funding of 2022 and 2021. So right now, it's really important to show the marketing's level, um, um, the potential of scalability, to show all these indicators that investors are interested in. And so it is much more competitive. So only the those companies that can really show the market demand um, will be able to secure funding rounds.
It's tough, but not impossible.
It is tough, but maybe it's exactly what also founders needs to focus on demonstrate those metrics that are not only important for investors but important for the success of their technologies.
And finally, looking ahead, what should founders and investors be watching more closely or most closely in the next 2 quarters? And can you see any surprises coming over the horizon for us?
So for the surprises, that's a very difficult question to answer, but I think that we circle back on the role played by strategic investors and corporations. So I think that what founders should focus on is on this establishing these partnerships with corporations, even if they are direct investors in the company or not, in order to prove their technology in the markets, to integrate their technology in the existing markets, and then I think that that's trend, and that's the way to go for what founders should be exploring at the moment.
Fantastic. Sofia Esteves, Head of Market Insights at Net Zero Insights. Thank you so much for talking to us. Some fantastic data and insight coming through. Give us the website where people can go and get access to your services.
Yeah, sure. So netzeroinsights.com, it's our website, but you can also explore stateofclimatetech.com, where you can find the latest report and all the other reports that we've been published on this global funding trends.
Fantastic. Thank you so much.
Thank you.